Hi, welcome to this video today, which features a true pioneer in trading. His name is Edward Thorpe, and he is one of the world's most successful ever hedge fund managers. Yet very few people have heard of him. Now, I featured him in our weekly Forex forecast a few months ago and actually deleted the file in error. So I'm putting it back up, so we've got the history of Edward Thorpe coming up. Now, he isn't very well known. I'm just going to start off with a short clip of him when he was on a game show where people had to guess who he was. At the time, he'd written the most requested book in the Las Vegas library. It was most requested because it was a book on probability, which helped you beat the casinos at blackjack, and he used the same probability theory to achieve outstanding success in the market. So just a short clip of Edward Thorpe, and then we'll discuss his trading strategy and techniques.
Which one of these gentlemen actually is the author of the most popular book in the Las Vegas library? Will the real Dr. Edward Thorpe please stand up? Thank you very much, Dr. Thorpe. Thank you, sir. Yes, Tom?
Well, I wondered if they'd let him in Vegas.
They often say, we don't like your action here. Would you please play somewhere else?
They keep you shuttling
But they
around.
can't really keep you out, can they? Legally, I mean.
No, they can't. Legally.
I believe they can. I think they're classified as private clubs.
Oh?
They can play to whom they want and not play to whom they want.
Huh.
Well, I think people ought to know that.
Welcome back of that short clip there of Edward Thorpe, and that clip is actually from an old 60s TV series when he first came to public attention. That is when he wrote a book called Beat the Dealer, which was a book which showed blackjack players how to statistically get an edge against the casinos by card counting and variation of bet size to win. Now, he did a lot of work on odds and statistics in the casinos. He eventually moved on to trading. Now, in terms of great traders, names frequently mentioned are obviously Ed Sakota, George Soros, Jim Rogers, Paul Tudor Jones. Don't hear Edward Thorpe mentioned very much, but he is up there with those guys in terms of his trading history and what he actually was a pioneer in, and also his track record. Now, if you look at what he actually did in terms of being a pioneer, he was the first person really to master statistical arbitrage, convertible arbitrage. He developed options pricing model before Black and Scholes, and he also was the first person to launch a neural hedge fund and also a quant hedge fund. Now, that's great, but what was his performance like? Well, it was extraordinary. Over 20 years, he only had 3 losing months, and in those months, all the drawdowns were below 1%. His compound growth on the other side was 20%. I don't think there's another fund that gets even close to that in terms of performance to drawdown. So a really fantastic trader. Now, before we discuss what we can learn from him, I just want to go back to his time in the casinos. Now, in terms of blackjack, he wrote Beat the Dealer, but before he did that, he actually worked out how to beat roulette. And he decided that the way to do it was just to measure the speed of the bull against the strobe and place the bet just before the bull landed. So the whole idea was to isolate the zone of the wheel where the bull would land. And he developed, which was probably the first portable computer to do this. An associate had it, would measure the bull velocity and give him a signal of when to bet just before it dropped. Now, he generated an edge of 44% doing that. But he couldn't actually continue with it. The people he were working with didn't want to carry on because they feared the casino, if they were caught, would resort to serious violence, which wasn't uncommon in those days. Now, he then went on to write Beat the Dealer. That book, I think it sold nearly 1 million copies and made blackjack the most popular game in the casinos. Now, in terms of some rather big casinos took exception to Thorpe. Actually, some of them actually discussed breaking his legs or even killing him, but then they decided it just wasn't worth it because the book was out anyway. So what they did was they made it just more difficult for blackjack card counters, i.e. multiple decks, shuffling, etc. Just before he left the casinos, he decided to basically beat the game of baccarat. And he was obviously not popular in casinos, but one casino saw him come in to play baccarat, and they said, well, if you think you can beat this game, you're wrong. Well, he actually did end up beating the game again by focusing on the side bets and not the main game. And yeah, he had his coffee laced with drugs when he came back, and one night he was driving home, his accelerator locked at 80 kilometres an hour. Now, could the casinos possibly have done that? Maybe. Now, in terms of coming into finance, it's like he said, in an interview once, in the casinos, everyone was trying to stop you getting an edge and was against you. In the markets, if you can get an edge, you can trade anywhere you like. And he developed his trading models based around what he'd learnt in the casinos. And he was very interested in mispricing. That's where prices have shot too far away, effectively, let's say, from fair value, and the odds favour a return. And I think, in terms of Forex trading, that is one thing that I think, we all look out for, or a lot of traders look out for, when prices move too far away from a mean price. Now, in terms of, swing trading, I've always thought, catching big volatile moves and going the opposite way is a great way to trade. A lot of traders don't like doing it, but when you've got really big price spikes, they tend to always fade. And in terms of for us, we obviously like selling price spikes or prices that we think have moved too far away from an average. And last week, I was looking at I've forgotten the currency I'm talking about. Sorry, it's the USD Huff. I was saying the USD Huff looked a fantastic trade. Now, on that trade, everything for us was right in terms of where the support was, basically where we could place our stop, and where we thought prices would go to. Everything lined up for us. Support, resistance, volatility, momentum, high odds trade. Now, that is a trade we would bet more on. And it's very similar to the way Beat the Dealer worked. When you have what you consider a really high odds scenario, then you go for it and you bet more. And I think in terms of variation of bet size, that was the key to obviously winning at blackjack with the system that Thorpe developed. It's also key to increasing your gains in Forex trading. You sometimes see setups where everything comes together. Now, you're not certain that the trade is going to go right, but everything is there. It looks a high odds trade. I've always been in favour of betting more money on those sorts of scenarios, certainly if I've made some. If I haven't made money, then obviously I wouldn't be betting above my normal exposure. Now, mispricing in the Forex markets, prices do move too far away. Greed, fear drives the price, and catching those price spikes, in my view, can be a fantastic way to trade because your reward is so much bigger than your risk. Now, going back to Thorpe, obviously he developed a method that was to take advantage of mispricing. He also developed a trend following method as well. He made a key point about the trend following method for me, which was he used technicals to track the trend, but he would actually look at the fundamentals, see where the big fundamentals were to back up the technicals. And I think in terms of trend following, you really ought to do that. I think if you know where the big fundamentals are, you can make a judgment of where the trend will run. It will give you the confidence to hold that trend. Unlike a short-term swing trade, you're looking further into the future. So the probability is not the same if you think about it. It's not just a single setup you're looking to trade. You're looking to trade a trend longer term. So it's a different scenario. So if you're a trend follower, I always recommend backing it up with the fundamentals. It's a bit like with us and the commodity currencies. we want to be on the short side of those commodity currencies. Aussie dollar, just over a year ago, we basically saw the fundamentals turning bearish, up at 92.50, set a target of 65. Now, there is no way I would have stuck with that trade without knowing how bearish those long-term fundamentals are backing up the trend. The trend is a reflection of the fundamentals. So I think in terms of Thorpe, you should read more on him if you get a chance. Fantastic thinker. In terms of what you can learn from him, I think the most important points we can take from him is trading high volatility is a great way to trade. Basically, if you look for those scenarios where prices just move too sharply, too quickly, you can come in, make a great profit in terms of the risk you're taking. If you want to be a trend follower, back it up with the fundamentals, and always look to vary your bet size when you judge the odds to be heavily in your favour. Now, in terms of obviously judging the odds in Forex, it's not quite the same as in blackjack. Obviously, the cards coming out the deck are clear, the ones remaining are clear. But in terms of Forex, I do think if you trade for long enough, you'll see certain setups that you will have a really big conviction on, and hopefully can milk them for a lot of money. Hope you enjoyed this little sort of summary of Edward Thorpe, true innovator in financial history, and a fantastic track record as well. So until next week, thank you very much for watching me. Take care. Have a good week.